You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. It's been a little bit since we heard that music, but now we're back. Time for the Thursday episode of the Movable Options Feast, known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting network. It's getting more exciting over the course of the past week and change. It seemed like it was a year ago that we announced and had the big OB1K episode and all the other stuff that has followed since, but it's only been a week and change. So a lot has happened in that time. Glad to see so many of you are enjoying. If you want to see what we're talking about, of course, check out, if you haven't, that Option Block 1000th episode spectacular. Head on over to theoptionsinsider.com. You can go to /plus or /pro. That'll explain all of the info. Hopefully a lot of you checked out, and it seemed like a lot of you did, that pro Q&A. Seemed like a lot of you enjoyed it. We did with the Oracle of New Hampshire himself, Mr. Matt Amberson. That was a fun one. You guys bombarded him with questions. It was pretty fun. So we're looking forward to a lot more of those coming on the pro side. So a lot of cool stuff to come, including tomorrow. The return of a fan favorite, the old Options Oddities. You guys have been asking for that one ever since we put that one on hiatus back with TD, so many years ago. So a lot of fun stuff to come. Check it out wherever you're getting our stuff. Of course, the place to learn more, theoptionsinsider.com. If you want it all in one place, theoptionsinsider.com/shop. It explains it all for you, what's going on, what you get, all that good stuff, and a whole bunch more. Let's see who we're hearing from on the program today. Let's start off. Let's go out way down deep into the heart of Texas, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. By way of Carmen Line Capital, by way of Gamma Radar and Robinhood Trader, all these other cool things. Mr. Meatball, welcome back to the program, sir.
Hey, it's good to be here. What a day. It's like monsoon season here in Texas. I got to be honest. So it was my son's 5th grade graduation today. Congratulations. He's off to junior high. And getting to and from the car, I had to change shirts. The rain was so bad.
So, yes, the only time in my life I've ever had to pull over for the rain was so torrential was in Dallas, actually. So not that far from you. So, yeah, you have surrendered, let's say, the frozen Januaries of Chicago, but you have traded them for some hellacious rain down there in
monsoons,
in the plains and tundra of Texas. Now joining us a little bit closer to home, a place where they never get torrential rain because the weather shield is always active. It's St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well, sir.
Great to be here. Ironically, we could actually use some rain. We've had a lot of dry weather up here recently, and Fox River is running really low right now, so I'm concerned about some spots with the prop on my boat. So, Seabass, send some of that rain up here. We could use it.
You know what else we could use? A little bit of the old trading block. It's been a while, so let's get to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Hopefully you remember how this works. I think I do. I think my cohorts do as well. It's been a little bit since they've done it. Uncle Mike took a hiatus last week. How dare he? So he probably forgot what this entire show is about. We'll see if we can drag him back in. Speaking of dragging things, the market seems to want to drag itself to the dark side today, even though the Dow is still fighting up slightly on the day. The only real kind of bastion of green left out there. Everything else is in the red, if depending on where you look, to different degrees. The S&P off, closing in on 0.25% as we kicked off the show, and the NASDAQ off about 0.75% as we kicked off the show. That puts VIX cash a little bit shy of the 18 handle, about 17.75 to start the show. It's up about exactly a point. We had a 16 handle this time on our last show, listeners. VVIX is at about a 112. It's actually up a little bit, up about 9 points from last show. VXX ticking up ever so briefly, up to about the 35 handle when we kicked off the show. Puts it up about half a point, but VXX has just been annihilated, and it got down to about that 35 level, 34 and change, and it seems like it's kind of tapped out there, at least for the time being. And then Vol Q at about a 19. That's up about half a point from where it was this time last week. So the NASDAQ vol can get away from the 20 to 22 level. It just takes some time. And we can see things moving. Speaking of things that are moving, you guys have probably been noticing this little bit of meme action going on. Meme 2.0, call it what you will out there, but AMC's been rocking and rolling, moving and shaking, gapped up to $30, then back up more. The next session up to, I think, got up to 72, and then back down again. It was in the mid-40s last I checked coming into showtime here. So it's been rocking and rolling. But they actually did one of the things that we were lamenting all these other meme stocks didn't do. The games and others took them forever. They actually sold some stock. So they took advantage. They said, hey, if you meme kids are going to give us money, we will gladly take it. So they sold about $230 million worth of stock. And they say they're going to use some of that for acquisitions. I don't know what they're buying. Maybe they should pay off their debt and do some other things out there. But still, yeah, they probably should use that as lifeline money to keep their struggling chain of theaters afloat. But maybe they want to acquire something. Who knows? But either way, that's been pretty fascinating to watch. Also fun. AMC kind of getting in on the act a little bit, it seems. They're not ignorant that the meme kids have almost single-handedly saved their business. They sent out an email yesterday saying, if you're an AMC stockholder and you sign up for their AMC Investor Connect email, you get a free popcorn. So there we go. Now that's their way of thanking you for throwing them a lifeline. They're throwing you a free tub of buttery popcorn. A lot of fun stuff popping off out there. Let's go back around the horn the way we went. Let's start with the greasiest of meatball. Mr. Meatball, A, are you getting your free tub of AMC popcorn? Are you now an AMC stockholder? And then B, what else is lighting up your tape, sir?
You know, I'm not an AMC stockholder, but Matt Benson is. I can confirm that.
Is he really? I believe it.
But I do have some options on it floating around, just to try and take advantage of the memeness of it. BlackBerry has been the one I've been more involved in. That's another one, like crazy memes. Things are so nuts that I had to basically put together a meme watch list. And it is a cacophony of failed companies and middling companies that continue to just go up and up and up. You know, names like Blue Apron are back on my radar. Express, Fuel Cell, GoPro's back, Kodak, Nikola is on my list. You got beautiful Nokia up there, Sandridge, Transocean. So it's the memeiest of memes. So it's all meme all the time. Today, the strongest meme stocks are BlackBerry, Workhorse, seen a pretty strong move today, and actually Ford, which you wouldn't think is a meme until like the reason why it's rallying so much because everyone loves that EV.
It's kind of memey now. Ford has definitely got a memey sheen to it now.
It's kind of memey. It's kind of memey. GE even has a swath of memeness to it.
I guess, what does it really take to be memey these days? One of the keys is a low price to drive it up. That tends to help. It used to be the heavily shorted. You can't really use that argument with Ford. So, the argument and the definition really have broadened a bit out there, but still fascinating stuff. So when you're not slinging meme stocks, what else is light up your tape, Mr. Meatball?
Well, we've had a nice turnaround. This morning was pretty darn ugly. The NASDAQ is still weak, but the Dow's turned positive. The S&P is off 0.25%. Volatility went from up to kind of not up. VIX futures are mildly higher, but not really doing a lot anymore. Travel and leisure had a really strong first couple days of the week. It is off. Oil continues to be really strong, and a pretty good driver. We right now, just about every XLE has been off to the races, and WTI is almost $70 a barrel, which is pretty crazy when you think about it. So energy has really been one of the big ones on my radar. And then, I know we don't normally talk bonds, but they seem to have kind of found a resting spot. Bond TLT has been in a pretty nice range for the last few days. So I'm wondering whether we've got kind of everything priced in. And, I'm really interested in what the next leg up or down looks like for the market. Because, like I said, they tried to sell it and couldn't. And I'm wondering if some of this memeness backs off, whether markets take off. And my gut says yes.
Speaking of taking off, if you're intrigued by all things energy and WTI, stay tuned. We'll be back in a little over an hour to talk about all that stuff and a whole bunch more with some great special guests over there on TWIFO. I got to imagine a 70 handle or roughly thereabouts WTI. Probably going to make it. I haven't checked the movers and shakers report yet, but I'm going to guess it's probably on there this week. Mr. Uncle Mike, sir, I know it's been a while, so hopefully you remember how to hit that mute button and talk and what the heck this show is all about. I know it's not about 80s wrestling as much as you might like it to be. Maybe that's a separate show for another day. But Mr. Uncle Mike, sir, what has been lighting up your tape in your long, protracted absence since we last spoke to you, sir?
Yeah, that one show, I get it. I can't wait till Monday to get the 80s wrestling themes going on again. But anyway, I agree with Mark. It was definitely an ugly morning today when we opened up. A lot of this came overnight in the futures world, so there was a lot of sellers overnight. And what's really lighting up my tape right now is the fact that we came back from the ugly morning quite a bit. At about 8:45 Chicago time this morning, S&P was at 4167. And then at a little after 10 a.m., so a little over an hour, it rallied past the 4,200 mark. So we had a really big rally within that 1 hour time frame. But what we did not have is any continuation. We're kind of staying right around the 4,200 mark at this stage. And so one thing that I am noticing in terms of the pattern of the market is that as boring and as painful as a lot of these things are, it appears that 4,200 is kind of like the magnet now in this marketplace. We've kind of been stuck there since about late April, April 19th, 20th, around that time frame. We've been at about this area. And so whenever we're in a situation like this, you got to be really careful, because every time you get a little bit of a rally, you start thinking, oh, this is the breakout right now. Maybe I should buy something. Or if we start to go down a little bit, oh, this is the sell-off we've been waiting for. Got to get out of everything. And so you have those temptations to do things like that when we are in a magnet-style market as such. So I think that the important thing here is to, of course, manage risk. Manage your risk not only from a monetary standpoint, but from a strategy standpoint. Don't get tempted into saying, oh, market's not going anywhere. I'm just going to be a premium seller and that's it. or market's not going anywhere, but it's going to move any day now. I'm just going to be a premium buyer, and at some point it's going to move, and it moved big, and I'm going to hit it big. Don't get too tempted in things like that. And so the market's really has not, quite frankly, shown its hand in over a month. We're just kind of sitting here right now. So it's frustrating for me personally to watch. I'm still trying to keep with my discipline and follow my rules and do what I'm supposed to do, like a good trader / investment advisor would do. To add to what Mark said in terms of the bonds, I agree. We do seem to have a resting point right now in the bond world. And so I think that, as I've been saying for the last few months, I think that a lot of the bond rally that we had due to COVID was just a little bit overdone. And I think bonds are at a very fair price right now, and they have been for a while. And so I think that I too will be interested to see the next leg up or down with it. And I think that for the time being, I think that we are at a pretty fair price with where yields are, with where things should be. And what I'm going to be interested to see is that if we do have a pullback in the S&P 500, if we do pull back to 4,000, 4,100, whatever the case may be, if we do that, are we going to have a rally in the bond market at this point? And I'm not convinced that we will. So we will see where it goes. But for now, I don't know if I'm bullish or bearish or whatever you want to, or bullish, bearish, or I don't know the word for it. But I guess I am neutral, and neutral meaning I don't think we're going to have a lot of movement in the bonds in the near future. So that's what's lighting up my tape right now.
Let's see what's lighting it up out there in the broad options market. Listeners, it's kind of like the day we've all been talking about of late, where the meme kids just get together and topple everybody. This top 10 out here today, we'll get to in a second, but hey, it's pretty damn active. 378,000 contracts to break into the top 10 today. It's been a while since we've seen that much paper. And it's a bunch of names that are, let's just use hashtag crazy town. We'll get to that in a second. First, let's break down what's going on in the major indices. A little bit less paper out here. It seems like it's more, again, in those single name kind of meme stocks that are driving all the flow today. VIX only had 187,000 contracts as of a few minutes ago. That's pretty light. ADV is a little bit shy of 600K. That has ticked up. It's up to 592. That's up about 20,000 from our last show. Then we've got SPY at about 2.35 million. That ADV is about 4.25 million out there. So SPY also not exactly blowing the doors off out there. The S, similar deal, 571,000 contracts right now. Even though that ADV has continued to tick up, it's at about 1.3 million. Usually this time of day, we see SPY at about 750,000 contracts, and it's a little light today. So maybe that ADV going to go back in the other direction. The Qs had exactly just ticked when we ran it a few minutes ago at exactly 1 million contracts. The ADV, 1.3 million out there. So the Qs have been doing some paper for a while. No surprise there. And IWM also looking decent, 320,000 contracts. The ADV is 539. So it looks like they have a chance to break it. That ADV has also trended down a little bit in the last few sessions. Now let's get out to the meme madness known as the top 10. I can't remember, listeners, the last time I saw a top 10 this, I don't know, call it what you will, lopsided, topsy-turvy. Probably a good description for it. Strange, all sorts of fun things. Because the big dogs, they ain't so big today, listeners. They kind of got knocked down a peg or two. I said it on the 1,000 episode spectacular. I said I'm hard-pressed to find a day when Apple isn't in the top spots and over 1 million contracts. And lo and behold, ever since I said that, it's been struggling to maintain that spot. Let's go to number 10 first. Number 10 on our top 10. Again, it cost you 378,000 contracts to break into the top 10 today. That's nothing to sneeze at. There are days, listeners, when we talk 150, 140,000. So this is almost 3x some of those light days we're seeing out there. So this is the pretty rock'em sock'em robots day. And that gets you all the way to NVIDIA. You know, it's in there with the crypto kids. It's out again. It's the canary in the coal mine for crypto. Now, not so much. All sorts of madness going on in the NVIDIA spot, but it's certainly good enough for 378,000 contracts and the number 10 spot on our list. And we're going to go up from there. Number 9, we're already at 420,000. Probably appropriate that our next name has a 420 on it because it's TLRY. The cannabis sector seems like it's kind of on fire out there today. 420,000 contracts for TLRY for a number 9. Number 8, going out to a name. We talked about it before, but it's been a little while. Workhorse Group This is a manufacturer of electric-powered vehicles, so it's another kind of EV play, doing 457,000 contracts. So roaring into the top 10 today with gusto. Number 7, yes, I said number 7, listeners. It's Tesla, 573,000. So workhorse closing in on Tesla already today. Tesla not feeling its oats. You know, it is feeling its oats for number 6. We're only at number 6. We're already at 619,000 contracts. That's how much paper is going up today, listeners. That gets you all the way to Nokia at 619,000 contracts out there. Number 5. Yes, I said number 5. It's Apple. What the? When was the last time I said that, listeners? It's been a while. 737,000 contracts. That's pretty light for Apple. Usually it's good for a higher spot on our list, but not, I think, today, listeners. Our number 1 guy is almost 4x that. I'll just put that out there for you. What could trump Apple? Let's find out. Number 4, it's Sundial. Number 4, we're already almost at 1 million contracts. Sundial also had quite the run out there of late. It was trading 70 cents. Not too long ago, and out there today, I do believe it's $1.30 now. Yeah, about $1.29. So it's had a good run over the last, let's say, just couple of weeks out there. So the whole sector just kind of exploding again of late after it seemed like maybe Sundial and some of these other hot names had kind of hit their apex and had come off a bit. And then we got number 3 going back out. Is it a meme name? It kind of is now. It's Ford. 1.1 million contracts on the tape for Ford, listeners. And we're not done. Number 2, Mr. Meatball's favorite. It's the old BlackBerry, a.k.a. BlackBerry. I always love saying BlackBerry, by the way. It just cracks me up that is still just a concern out there. I remember the old days of the rims and then the BlackBerries over there on the floor of the SEBASTIan, people fighting to get out there in those pits. And here we are still talking about it all these years later. Nearly 1.25 million contracts, but it's not enough for the number 1 spot. At this point, you can probably guess what the number 1 spot. I think the free bucket of popcorn really resonated with people because it's AMC. This is the highest I've seen our top 10 in quite some time. I have to go back and look to see the last time we topped this. 2.56 million contracts on the tape for AMC. So AMC ain't playing around, listeners. They are here over 3x Apple. When's the last time anything did that? That's insanity. And of this madness, what is the most mad in terms of bias paper? It's Sundial. 92% of that nearly 1 million contracts coming on the call side of the ledger. Man, that is serious business. Speaking of serious business, listeners, let's break down the numbers hot off the presses from our friends at OCC for May. They're in. We have them in our hot little hands. OCC, they just announced May, they cleared 723.7 million contracts. Is that a lot? Yeah, that's a lot. It's up 32.7 million. 32.7. I got millions on the brain from the top 10. 32.7% from this time last year. Remember, May of last year was no slouch. And it's also the highest May volume on record. So that's kind of what OCC is doing now. They're trumpeting when a month is the highest on record. So that's what we got out here today. Year to date ADV is 39.3 million. So the market's doing nearly 40 million contracts a day. Listen, that's up about 42% from this time last year. Remember, last year was a record year. And the ADV already so far is up 42% from that. Let's drill down a little bit further. Remember, OCC clears a bunch of stuff. Let's go first, obviously, to exchange listed options. That's where we hang our hat. 718.3 million. That's up 32.6% from last year. Equity options, drill down a little bit farther. That's 677.8 million. That's up 32.5% from May of last year. Drill down a little bit farther. Cleared ETF options, 210.5 million. It's up only 5.1%. So ETF options have kind of been a bit of a struggling point out there in the sea of options volume. You know what's interesting, though? Index options also have been. And the last couple of months, they've been turning it around a bit. Index options volume, 40.5 million, up nearly 34% from this time last year. And rounding it all out, they also cleared VIX futures over there. Last month, VIX futures and index options both turned to the bright side. Let's see if we can have that trend continue. Total futures cleared volume, 5.3 million contracts. That's a 59% increase from May of last year. Interesting stuff. Mr. Meatball, A, do any of these numbers surprise you on the most actives or the meme kids or anything else like that? And then B, I'm kind of curious, Are you surprised now 2 months in a row we've seen an uptick both in overall index volume and in VIX futures volume, sir?
So I got to say, I'm not surprised. AMC did over 3 million contracts for several days in a row, just absolutely bananas. I saw a stat that it accounted for 1/10 of all equity volume over a couple of days. Think about that. One stock is 10% of all the equity trading, and that was AMC. So yeah, I'm looking at the one that's kind of a surprise is how busy Ford is today, right? I mean, Ford is on pace to do 1.5 million contracts. That's crazy. And Sundial is $1.30, and it's going to do close to 1 million or more than 1 million contracts today as well. So not a huge surprise that you see some of these meme names absolutely blowing up. I would argue that there's better ways with like a name like Sundial than going out and buying call options for 20 and 30 cents when the stock is $1.30. But that is producing some volume. And on the index side, it makes total sense. We've got the VIX starting to normalize. So you have people willing to try and use VIX to hedge again. That's been missing for a while. And kind of the same thing with the S&P 500. It's amazing, but it's right near an all-time high. It's a time to hedge. And what always surprises me, I was on a call last week with a couple of financial advisors that are kind of at the MD level. So they're like the financial advisors that are also in charge of financial advisors. And, I had to explain Rule 1256 to them. And they had never even heard of it. And they're like, oh, wow, that's amazing. But it's not a shock that you're seeing a big amount of volume move away from SPY into a name like XSP. You're seeing the SPX pick up. And again, VIX and VIX futures doing a lot of business. There's been a lot of opportunity to trade in and out of them. And, the reverse splits of VXX and UVXY is garnering a lot more volume and a lot more interest. And that is another piece that I believe likely drove VIX futures trading.
Yeah, we'll get into more of that tomorrow, of course. On volatility views, let's look really quickly. The numbers coming in hot off the presses right before the showtime as well for all the earnings move analysis you folks love, courtesy of our friends over there in ORATS land. Where to get the latest reports, theoptionsinsider.com. Click on the options news and articles tab, and then you're off to the races with the earnings move results and earnings season reports. Let's break down a couple here really quickly. We had some decent names this week. Zoom, Hewlett Packard on Tuesday, SPLK yesterday, and Cloudera. Today we had Ciena, Broadcom, and they of sheer yoga pants infamy, aka Lululemon, and Slack, easy for me to say, Slack out there. And we have some earnings move results reports for you out there. Looks like we have Splunk here. They were at 123.79. They were pricing in 6.6%, and they actually outperformed. They delivered nearly 9%, so they were at 113 as of this report here. So there we go. A little bit of outperformance. Let's go to Ciena really quickly as well. They're before the bell today. They were at 54 and about a half when they announced their earnings. They're pricing in 6.6%. Get this. Also delivered 7.9%. So a little bit of outperformance out there in the world of all things earnings. We don't have Lulu. I do believe they're after the bell here today. Let's just pull it up really quickly. Yeah, Lulu is after the bell. So is Five Below. Let's look at a real quick glimpse at what they are pricing in so we can see what to expect. Lulu was at 320, almost 321 as of this report. They were pricing in 1722. In the past, they've moved over $26, 26.12. So they've clearly gotten the memo out there in Lulu that less is more when it comes to earnings vol. Let's see if the same thing can be said for Five Below. They're after the bell today as well. They're at about 180 even. As of this report, they're pricing in almost $10.50. In the past, they moved $12.70. So once again, less is more when it comes to earnings vol. Let's see if Marvell, they're actually on the 7th after the bell. They're following suit as well. 47.5, is where they were. They were pricing in 238. In the past, they moved about 230. So not a heck of a lot out there for them. In terms of the season, how is it shaping up? Well, even though a few names have managed to outperform a little bit, it still is pretty much a blood red season, listeners. We're averaging about a 74% right now return on that vol dollar. So if you bought a basket of vol for $1, you got 74 cents back. This week so far is shaping up to be a pretty bad one, 62%. Last week was actually decent, 96%. The week before that, 81%. Week before that, 65%. Week before that, 51%. That was the worst week of the season by far. And then week 1 was 78%. So all of that averaging out to a still pretty dismal 74%. You know what isn't dismal, though, listeners? It's the odd block. So let's get to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, we've had a pretty full docket of names to review. It's pretty much overflowing at this point. So we're going to hit a couple of those right now because there's so much popping off today. We want to get to that, but it's almost like, again, peering into the hurricane. So much paper out there to find the nuggets. But we have some interesting nuggets for you right now. First, we're going to set our Wayback Machine back to April 29th, talking about some names that are resonating today pretty soon as well, back on the 29th. But first, we're going to go out to Clear Sign Combustion, ticker symbol CLIR, CLIR. We talked about this on April 29th back on the show. We talked about someone gobbling up. This is one of these cheaper names, but someone coming in and gobbling up at 4,166 of the May 5s, doing it for 43.5. So I remember this one now. We joked about this. This was, at the time, one of the worst markets we had ever seen disseminated in the history of the show. The market they put out there for these calls was no bid at $10. So, dealer's choice what the hell they did with these bad boys. If they sold them, it might have worked out because it went up for 43 and about a half cents. That's a 79 vol if you are indeed interested. It was exactly the at-the-money strike. The stock was 503 when they put these bad boys up, and there were earnings in this cycle. This was an earnings play. They were on May 12th for this bad boy. So, again, it's kind of open to interpretation when a market this ridiculous. They didn't lift the offer for $10, so good for them. They managed to get a print at 43 cents. And it looks like if you sold them, that was the way to go on these bad boys, because the stock closed at $4.67 on expiration. Pretty much went right down after the earnings announcement. So not a lot of joy if they were indeed a call buyer. By the way, it looks like more paper flocked into this strike because on expiration, there were actually double the amount we saw going up. There were 8,000 of these bad boys open on expiration. So we could read into this a couple of ways. We could read into this that, hey, you know, someone ended up throwing away a lot of money on these bad boys to the tune of about $1.8 million, not just this 4,000 lot. Or flip side, they sold these bad boys. They got an interesting fill, and they ended up making nearly $2 million on this, which, again, on a $5 stock, taking nearly half a buck in premium, it's not bad for a few weeks worth of work. Mr. Meatball, I put it to you now. First off, what are your thoughts on this no bid at $10 market? B, what do you think? I remember myself and the Rock Lobster, we debated this a little bit. What do you think this customer ended up doing? And then C, as a result, how do you think they fared, sir?
Oh, wow.
Yes. Oh, wow is the appropriate response to that.
Yeah. No bid at 10. That's a ridiculous market. That is insane. And not cool at all. All right. And that it gives market makers a bad name. So put up a better market makers. Let me start there. And, you know, let me look this over. I think Oh, that I wonder whether they were betting that this could land in meme land, because it's over $5. It made a nice little move. I don't know what clear sign combustion does, but I wonder whether I think that was a call premium sale. I'm going to say that. I'm going to say it was a covered call, and they made a lot of money. I'm just going to go that route because it'll make me happy.
It's a happier way to go. I agree with you.
Yes.
I think our first blush when we looked at it, we thought they might have bought him, but you're right. It makes me happier to say that they got almost 10%, nearly $2 million just to overwrite these calls. And it worked out because I said the stock was shy of 470 on expiration. What do you think happened, listeners? What do you think happened on these bad boys? You trade this one. Seemed like someone maybe was coming in weighing that this one wouldn't get the meme love, and it seemed like it worked out in their favor. Speaking of meme love now, let's go out to a name that is lighting up the tape today and was lighting it up back on April 29th as well. Yeah, we're talking about Ford. This thing just off to the races, almost $16. I mean, who would have thunk that just a few weeks ago out here? Ford has been kind of a perennially sleepy name, rallies from, its nadir of around $1 back in the, the great financial crisis all the way up to around 10 or so bucks, maybe a little bit more than that. Then it sells off again. And it was kind of range bound for the better part of the last decade. It had a few moments here or there, but not so much. Like I said many times on the show, I saw people arguing vehemently when Ford was back around, $4 or $5 again, not too long ago, that, that's a value trap. Any money in Ford is just wasted money. And here we are now, nearly 4x that. Threatening 16. We were just joking on the show about the 18 calls that someone was gobbling up, and we thought that was kind of outlandish, a bit of a bridge too far. We're only 2 handles away from that now, listeners. So Ford is definitely on the rampage out there, but it was also moving back on April 29th. Let's go back and see what our Eye of Sauron found back then. April 29th, an active day, listeners. We profiled. Go figure. Someone was gobbling up some calls in Ford. That seemed to be the trade even back then. It was 3,882 of the May expiring on the 14th. So these are the weeklies. 11.5 calls going up for 28 cents. That was lifting the offer. Unlike our previous market, this was a nice tight market. This was a penny wide, 27 at 28. So effectively a pick'em on these May 11.5 calls. The stock was $11.15, so a wee bit shy of where it is right now, back when these went up. Obviously, no earnings baked into these. The next earnings announcement is on July 29th out here. Let's see. What was the vol? The vol was a 47 vol, so getting kind of up there for Ford, but again, seeing the movement it's had of late, it's undervalued at that point, probably. Worth noting, more came in after our show to the tune of about 20,000 total trading of these May 11.5s in the weeklies on the day. So someone had to have these May 11.5s. And you might say, hey, buying calls in Ford, no brainer. That probably worked out. And it did, but it kind of didn't too. It's kind of more of a kind of because the stock ended up closing. I said they paid 28 cents on these bad boys. The stock ended up closing on that weekly expiration on May 14th at 11.84. So right around where you needed it to be for these calls to break even. And it looks like they started taking these off even before expiration in small lots here or there. And they traded on expiration day as well, all day long, for between 20 and 30 cents. So doesn't seem like this guy really made a home run. It's like he probably scratched or maybe lost a little bit on these. If he held it, he obviously would have had a few cents to the good here. But it seems like he mostly scratched to did all right. Didn't really cost him much other than the opportunity cost of holding these calls. So he did all right, but it wasn't quite the home run. Let's say he did this trade a few weeks ago versus what it would be right now. It'd be a much different story. This guy would be on his own private island right now. Instead, he kind of scrambled to scratch him, and he ended up eking out and living and fighting to survive another day. Mr. Meatballs, that your takeaway as well? You think call buy in Ford, bit of a home run, but this guy shows that timing is everything in options, sir.
Yeah, I mean, he did all right. He did all right. It'd been nice if he'd done June. It would have been an absolute massive home run. But, yeah, I think he made money.
Yeah, if he had just put these on for even like a week or two more, let's go out, look really quickly and see where we were on actual May expiration. Yeah, these things would have been, yeah, so let's see, what strike was he? He was 11.5 strike. He would have been almost $2 to the good, $1.80 to the good. So yeah, just a week later, he would have looked a lot better. So again, timing is everything in options. Listen, that's why this is a difficult dance sometimes out here. Even the best of us can be off on our timing calculations. Let's got one more here. Let's wrap it up. This is kind of a rare one here, listeners, this odd block, and that we've been talking mostly line in the sand puts out here. And all the trades we talked about, and certainly the ones that are profitable, have been premium writing to the dark side. Call buys have been more challenging, which may surprise you because the market's been pretty much bouncing up a lot of late, and certainly in a lot of these single names. Yet, as we said before, you need to capture that movement when it happens. If you sit on it, it doesn't really work out so far. Let's see how it worked out for our final name. Once again, we're going to the light side. We're buying options again. This time, upside calls. Once again, this time in Antero Resources Corp, ticker symbol AR. This is the name. Well, I won't profile where they. A year ago, let's just say they were trading $3.13. That's all I'll say because I don't want to give any spoilers. April 26th is when this trade went up. We profiled 9,700 of the May 11 calls going up for a quarter. Paper lifting the offer. There were 20 cents at 25. So once again, a much better market than our first market out there. These went up on the Philly when the stock was about 9.25. More came in after the fact to the tune of about a total of 22,000 of these May 11 calls going up for around those prices. And it looks like this one kind of worked out. So we're getting some long premium winners finally, which is a refreshing change of pace. Excuse me. The stock closed at $12.76 on expiration. He was long the 11 strike. So do some basic math there, listeners. It looks like it worked out. Weirdly enough, there were still a bunch of these open at expiration. I said 9,700 went up. There were about 9,000 still open on expiration. Worth noting, 22,000 traded on the day, and most of that was opening. There were about 21,500 open at the end of the day. So there were close to 22,000 open by expiration. There were still 9,000. So it's anyone's guess as to which lot they took off and which lot they kept on. If our friend here left his 9,000 lot on, which is possible, then he really wanted to get himself some stock at the 11 strike, which he did. And he's now happy because the stock is trading $13.20. So it's up about almost 50 cents from where it was at expiration. So maybe he made the smart call, getting the stock instead of dumping out the calls. Or it could be whoever came in after the fact left their 9,000. But this is kind of a theme as well, Mark. We've been noticing this for a while. You have these moves in your favor in some sort of long premium trade, and for whatever reason, they don't really take all of it off. In this case, it worked out aggressively in his favor, and yet he still left the calls on. So maybe he was using the calls as they were intended. He really wanted that right to buy the stock, Mr. Meatball. Is that your takeaway as well?
Yeah, it certainly feels that way, doesn't it? It'd be nice to have one of these where they just close the position and walk away with a huge profit. But we have not seen that happen very much, unfortunately.
Yeah, they seem to be conspiring to make our job a little bit more challenging. Because if they just bought them and they sold them a week later for a nice, hefty profit, we could talk about that pretty easily. Instead, it kind of gets into the weeds of all this other paper. And folks leaving on long premium well beyond when they've worked out for them, which is always an interesting and / head-scratching thing to me. You know what else is interesting / head-scratching? It's your mail, so let's get to it.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's do it. A lot of you have stuff about the network on the brain. Let's start off with a couple of related ones. First from Jasper. Jasper says, hey, I'm really excited about Options Insider Pro. Looking forward to so much cool stuff. Thanks. Well, thank you, Jasper, and everyone else who's joined us on this crazy journey. It's just kicking off. It's completely nascent. I mean, like I said, it was only a week and change ago that we even announced the thing, and I'm glad to see so many of you have already joined us on this ride. It's crazy. I'm kind of excited too, because I don't know where it's going to go. I have ideas, but the way it's going to grow and evolve from what it already is, which is already pretty cool, then it's going to add more bells and whistles and more cool stuff. Like, really, this is just the beginning. So I am quite excited. I'm glad that you are excited as well. Jasper, you guys know where to go to learn more. theoptionsinsider.com/shop. Easy for me to say. Also /plus and /pro. Should work. Or just go on there, click on that little shopping cart icon. It'll explain everything, what's there, what we're doing, all the cool stuff, and a whole bunch more. Similar comment here from Alan. He says, that pro Q&A was pretty cool. Yeah, it was. It was pretty fun. Are you planning to do more of those? Well, short answer, yes. That's going to be a weekly occurrence. The longer answer is that was your freebie taste out there. If you want to get those every week, and we're lining up cool guests as we speak, listeners. It's going to be just a full docket of awesome people to pick their brains. So if you want to get in on that action, theoptionsinsider.com/shop. That'll be coming out every Tuesday. I think is going to be our pro Q&A day going forward. So look forward to those every Tuesday. A great, fun new guest for you guys to pick your brains of your pro members. You can send in those questions if you can't make it live. So a lot of you took advantage of it this week. It's going to be fun to see who we have next week. All the members will get an update every weekend. Here's what we have coming up for the week. In fact, here, that goes out to this next question here from Patrick. Patrick Highland says, do you have a schedule that lists the dates and times for all of your shows? Can't seem to find one on your site. I would like to listen to them live. I'm not getting the emails on the live shows. Patrick and everyone else who has that question, yeah, it is available now on our website. It's on the homepage. It's below the fold a little bit. You have to scroll down a little bit. You'll see that schedule there. So I could not fault you if you missed it. We probably should do a better job of servicing that. What we are going to do, what I was just mentioning too, is all the member people going for it, because a lot of the live is going to be for the members over there coming soon. So you'll get an email every week saying, here's our live schedule for the week. Here's what we've got. Here's who our pro Q&A guest is. Here's what we're talking about. So you will have no questions about what you can look forward to on the week here on the network. So we hear you. We're going to do a better job of surfacing all of that for you folks out there. Patrick, going forward. Here's Luigi in the chat. He says, AMC head spin. Laugh out loud. Yeah, I think we all had that. Oh, speaking of AMC, here's one from Nichols. Nichols says, with a Z. This name sounds familiar. He says, did any of you guys get in on the AMC meme madness action? Any cool options trades? Well, Uncle Mike, I know you weren't here over our last show and pretty much for this better part of this last week because you've been nose to the grindstone slinging AMC on behalf of the retirees and elder folks in your St. Charles Wealth Management portfolio. So what have you been getting those folks into, Uncle Mike?
Lots of AMC. I mean, it's just been nuts. I actually do have I still do have some clients that actually just trade through our institutional platform, and then our relationship is that they'll call me for advice from time to time. And one client, he's a portfolio margin client, and it was interesting because he has some naked calls on AMC, or shorts and naked calls. I mean, he had some other stuff as well, but it was a complex position. But I actually got a call from TD, so they actually upped their requirement to 150% for AMC. I was going to say, calls.
You're getting a call on those naked short calls pretty soon.
Yeah, so it was interesting in that, typically, just to kind of give our audience an idea, I'm not much of I don't know if I think maybe of the over 1 million option contracts I've traded easily in my career, I've probably maybe shorted maybe 4 or 5 naked calls. I think I just did it just to say I did it. But typically your naked call maintenance is going to be roughly 25 to 30%. And if it's in a portfolio margin account, depending on the stock, it could be 5 to 10%. And so with AMC, I'm getting calls. It's not only is it 100%, it's 150% is the maintenance requirement in a portfolio margin account. So that's the only AMC story that I have to give.
I'm surprised you had one. I'm surprised it was a naked short call. That's not at all what I expected. Mr. Uncle Mike, I should say, Mr. Meatball, you said you and the crazy kids in the pitch chat were slinging some AMC over these last few sessions. What were you folks up to, sir?
Yeah, I was trading a lot early in the morning before it completely took off. I was trading AMC. In the afternoon, IB throttled AMC trading, believe it or not. And I ended up doing some out of the money call spreads. The trade that I really like I did this in BBY, and I can't believe I was able to do this. I want to make sure I get the strikes right here, Mark, but wait till you hear this. All right. So BB was trading 15, or we'll say BB was trading a little over 14. All right. I bought the 14.41 call spread. The 14.41 call spread in regular June. So it's got almost, yesterday it had 2.5 weeks to go. And, vol through the roof. What do you think I paid for that call spread?
It's going to be something gross. So I'm going to say like 36 cents because it's going to be something offensive.
It wasn't that cheap.
No.
It was $2.30.
Oh, that's not bad. That's pretty good. Yeah.
Yeah. For a 27-point vertical, buying an in-the-money call, selling a call that was $27 out of the money. I sold the 41 call at $1.05.
Wow.
Bought the 14 calls for $3.40. That's turned into a pretty nice trade today, as while AMC vol is up, skew has flattened out in both BB and AMC. A lot of these meme names, we're starting to see upside skew start to flatten up. I'm wondering whether today, with that stock offering, was peak meme. Just kind of wondering.
Someone actually cashing in. In the past, that news would have crushed it. You're right. It seemed like when that news was first announced a few sessions ago, it actually fueled the fire more. Hey, they're making money off us. It's better. Drive it up more. So that's kind of the world we live in. But you're right. It's been kind of fun. You're right. I've had a few flyers out there. The vol was so crazy out there in AMC last couple of days. I was put out some crazy penny, stub quotes for crazy wide flies for stupid prices like a penny or a dime. And I was getting filled on some. I couldn't believe it. And they're looking pretty good. And then, of course, AMC would just blow through all the strikes and they were completely irrelevant. But for a while there, they were looking pretty good. You're only throwing out a nickel or so. So it was kind of fun. But yeah, it's one of those kind of names, listeners. If you could throw out a bid or an offer for almost anything, and chances are you're going to get hit. So interesting stuff here. I feel bad for this poor Victor. He's been waiting for a while on his one. We're kind of just running up against it here. Maybe we'll get to it soon. I'll get to it maybe on Monday's show, talking about this weird Amazon trade. Instead, let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. It is that time again. It is time to tell you what we're watching on these crazy markets until our next show on Monday. Yeah, we're back on Monday. Listen, let's go around the block. Let's start with the Unclest of Mikes. Mr. Uncle Mike, when you're not busy overwriting naked calls in AMC on behalf of your retirees, sir, what's on your radar?
Of course. Just watching the SPX. I want to see it get away from 4,200. I wanted to see that. We'll see where it goes at some point. I don't see it staying here forever, but watching to see which way it goes, whether it's up or down, and continuing to watch the Treasury yields to see where they go as well. 1.6 10-year. It's kind of a common theme now.
The 10-year. It's like the Viceroy never left the show. Maybe we'll get some more rates coming up a little bit on TWIFO. Listen, let's go out to the greasiest of Meatball. Mr. Meatball, sir, when you're not legging into crazy verticals in AMC, in BlackBerry, what are you keeping an eye on, sir?
On top of the meme names, I'm looking at oil and banks. Banks are actually having themselves a pretty nice day today. And then I'm watching Apple. Apple has been kind of hovering around 124, 125 for what seems like a week and a half. There was a buyer of about 30,000 July straddles a couple of days ago. And I'm wondering, is that going to pay off? And then the other name I'm watching is Vodafone, VOD. And I'll tell you why. If you look in October, the October 19 calls have open interest of 117,000 calls, which is a normal position in Apple or in VIX or something like that, but not in Vodafone. All right. Let me explain this. Vodafone total call open interest, 223,000. That is over half of the call volume. Total open interest, 276,000. It's about 40% of the total open interest. So somebody developing a massive position on the Vodafone October 19 call. So I'm wondering what's going to happen there.
Wondering indeed. You have to keep wondering on this show, listeners, because that music means we're coming to the end, at least for the old OB. If you're listening live, don't worry, get a beverage. We'll pump some fun stuff into the chat. Back in exactly half an hour to talk all this madness and energy and everything else. Who knows? Dead trees, crypto, who knows what the hell is going to make it on the show. I have to run the report to see for myself. But before we go, let's go back around the horn. Let's start with the Unclest of Mikes. When you're not busy, like I said, slinging that AMC and gobbling up the dead trees on behalf of your clients, Mr. Uncle Mike, if folks want to reach out to you, maybe they want to talk about becoming one of said clients, where should they go? What should they do?
And they can reach me in several ways. They can go follow me on Twitter at Mike TOSAW, or go to my website, stcharleswealth.com. Reach out to me that way. More than happy to have a conversation with anyone and everyone. And if you'd like to work with a financial advisor who actively uses the option product in most of the things he does, that is me.
And get in with a dead sexy financial advisor, if I do say so myself. You know where to go. stcharleswealth.com. Hit him up on the old Twitters as well, at Mike TOSAW. He's always tweeting out charts and always tweeting out analysis and tweeting out things about the strategy block. So stay tuned for that. And Mr. Meatball, if folks want to check up all the meme madness going on in the land of the pit, where should they go? What should they do?
Yeah, go to optionpit.com and let us know. Sign up for our email list. We're going to send you actionable stuff on VIX and on meme stocks and the whole 9 yards. Yesterday, I wrote up the fact that the VIX basically correlated to AMC yesterday. Did not do it as much today, but really interesting stuff.
Correlations that we never thought we would say at the beginning of 2021. But now AMC and the VIX correlated at least for a day. All sorts of fun stuff. Find it out for yourselves over there at optionpits.com. It's easy for me to say. optionpits.com. And on behalf of the greasiest of meatballs and the unclest of Mikes, I think I'll be out there for downloading, streaming, subscribing. We'll be back, like I said, half an hour for Twyford listening after the fact. Just hit next on your device of choice. It should be ready and waiting there for you. Back again tomorrow, noon Central, 1 p.m. Eastern, for volatility views. Then after that, the return of a fan favorite, Options Oddities after vol views. I think we're going to do it at 2 p.m. Central, so an hour later. So stay tuned. Got a double dose coming at you tomorrow. Should be really fun. You know where to go to learn more. TheOptionsInsider.com. /plus and /pro should get you there. And we'll see you back here in a little bit for Twyfo. And then again tomorrow, noon Central, for volatility views. And back again on Monday for the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.